What's up, everybody? It's Matt again. It's Tuesday, April 26th, and the first thing you can see is I've upped my production value. Clearly, I'm having a little fun with this. I enjoy doing this stuff, so I don't mind it. I love to learn new things, and I also have a newfound respect for people that do this type of content. So that's not why you're here, probably. You're more likely here because I sent this link to you and you're kind of bored and you feel like you want to entertain it. So we've only been 2 days into the week so far. We've had a lot of activity happen. So there's some levels, some things that I really wanted to show you guys. This one's going to be a shorter one. I'm going to kind of go over couple of the earnings plays that have happened so far, as well as some of the indices. So let's get into it. So as you can see from the earnings calendar here, we had UPS report this morning. Not a lot of excitement, truthfully. I don't think earnings were terrible or great. The guidance was relatively in line, muted. So that tells me that so far activity in the economy as far as supplies and things moving around hasn't changed dramatically yet, which is relatively okay. Tonight we also had Microsoft, Alphabet, aka Google report, and Chipotle. So I'm going to go over briefly some of these charts. After hours, there's really not a lot of excitement, so we'll just go over them quickly. So the first chart I wanted to go over here is UPS. Here's your risk ranges once again. Here's your response today. Not a lot of activity. So conclusion would be, if you bought calls, if you bought puts, you're likely losing money as that implied volatility gets sucked out. So not a lot of activity. We're getting pretty oversold here. I'm a no trade on this one. It's not very exciting at the moment. So let's move on. Microsoft. So this is a 4 hours chart, including the after hours trading. You can see they dropped quickly on earnings report down to about 259. Didn't quite reach this risk range, but within $4. And then they ran it back up. Looks like they hit a high of 289-ish, and they're closing around 282. So still within this risk range. I'm sure we'll get some resolution tomorrow once we get some activity in intraday during normal market hours. But something to note here on a 4 hour time frame is we've got a series of lower lows on the price chart. We've got a series of higher lows on the MACD, series of higher lows on the RSI. So there is some potential for this to possibly bounce up. If we go to a daily chart, we can see there are some opportunities maybe to fill gaps. So maybe they try to get back up to the top of this risk range. There's a gap here around 297, we'll call it, and one up here around 310, 311. So if Microsoft can get some legs and get back up above here, that's going to be better for the overall indices and the top 10 SPY holdings. Time will tell. Google dropped on earnings a little bit here. You can see they got hit hard in after hours, came within, $20, $30 of this lower risk range, and they bounced it right back up to 2,300. So once again, fairly muted activity after hours. So tomorrow will be a better tell with these kinds of risk ranges and post earnings. I'm more interested in playing these levels. So if it were to drop below, maybe it's a long, but I'm probably a no trade on most of these. This one is so beat up too. It's hard to want to go short into any of this, but I also don't want to go long. Let's look at Chipotle Mexican Grill. Not a big mover in the after hours, and it can be a grinder during the day. But again, still within this risk range here. So not a lot of activity. If it closes flat, most of that implied volatility gets sucked out, and the premium sellers are the ones who win. And that's the case for most of these mega caps post these events. Most people lose money if they're buying outright calls or puts. You're better off trying to collect some premium, doing some varying trades, but we don't need to get into all that. I wanted to bring up Tesla with the whole Twitter news, Elon buying out Twitter, and everybody freaking out that, we're upset because he's leveraging his Tesla shares. Honestly, I don't give a shit what the reason is. Tesla maybe was going to move down. So I'll give you my general theory. the market to me is manipulated. They decide what they want to do with it. The liquidity providers, hedge funds, the big boys, they decide what they want to do. To me, the media finds a reason why it did what it did. Again, I don't care what the reason is. I just care about what the charts are doing. So Tesla, these are the old risk ranges. I don't have the new ones on here, but you can see today got hit hard, down 12%, $121. But it's at an interesting level here. So you can see here previously back in late 2020, early 2021, we had some resistance levels here. So it couldn't quite get above this level, pulled back. So we've talked about stocks go into expansion, then they go into contraction to consolidate. Expansion, contraction. So this was your expansion point, consolidated, contraction, another expansion point. Now are we in some bigger consolidation point? So again, is this going to come down here? Is it going to bounce back up here? We don't quite know yet. There is an interesting bullish pattern here. So at this, what is this about? We'll call it 885, give or take, right? You have what I would call a potential inverted head and shoulders here too. I'm not predicting this, but I'm saying if this thing were to start getting some legs and get up here and break out of this, there is potential for this to run up even higher. So we can't rule out the bullish scenario here. It's at an interesting level. So it'll be, I'm curious to see how the bulls respond to this into the end of the week. We've got end of the month expiring options on some of the indexes too, so that could play a big role in this. Again, on this one, I'm a no trade. I'm not too interested in it myself. Let's talk about the indices. This is the bigger reason I wanted to talk to you guys. So the SPY is approaching its lower risk range here. And what's interesting also is this trend line that we broke out of back when we had that huge run up into the end of the quarter has not been back tested yet. So you have a confluence of the Ukraine low. You've got the lower risk range here about 412, and you've got this trend line. So one could divulge there's a possibility of a nice bounce play here. Again, I'm less interested in this one. I'll show you what I'm more interested in, but could we come down here, bounce back up to this level again somehow and create some new pattern here? I can't say for certain yet. Or do they flush this down intraday and then get a nice recovering candle? So what I would say, knowing the things that I've seen in this market, you have experienced traders and you have inexperienced traders. An inexperienced trader would look at this level being broken as the market's going to flush down, all hell's going to break loose, everything's going to sell off. While an experienced trader would look at this as, I've been short since here, I've been short since here. Once we break these lows, I'm going to cover some positions and maybe new long step in here. So this is where you get these massive squeezes, bear market rallies, where at some point we're going to find a low. You're going to have a perfect scenario of inexperienced shorts being forced to cover. You have experienced shorts that are covering. You have new longs coming into the market. So you can see why the dynamic creates these big upswings, whether you get 2 or 3% moves in some of the indices within a day, and they just don't stop because the forces are just to the upside. There's nothing but buying upon buying. So I've seen this play out. I'm not saying it's going to play out in this scenario, but that's always a possibility that we have to be aware of. So keep an eye on this 412 level on the SPYs this week. This is the one I'm more interested. So there's a number of things I want to talk about. As we've approached, you can see again, this is a similar trend line to the SPY, but we have not gotten anywhere near it. Now, why I'm more interested in this. So first thing to note, let's go to weekly time frame. I just want to bring up one thing that potentially people are watching here. There is a possibility that it is creating a head and shoulders here. I think I brought this up on Sunday, right? If this is your left shoulder, this is your head, this is your right. So there is a possibility that this could be the breakdown. I want to counter that with something else here. If we go out to a larger weekly time frame and we include the .com bubble, I'm going to remove some of these drawings here to make this simpler to understand. So here's the .com bubble. Here's the current situation that we're in. Look at where the MACD is. We are nearing levels that happened in 2001. So this is where I'm a little bit skeptical of this rising head and shoulders playing out, because we are getting so oversold here, and that's where I'm more in the lines of there is a possibility of a bear market rally happening soon. And I'm not saying it's going to happen. That very well could be voided out. But we don't have any massive volume here or any rising volume quite yet on a weekly time frame that tells me the disaster is about to happen. So let's look more from this possibility. Let's go back to, well, let's look at this time frame. So this 297 line is a very important level. Why do I say that? We've got prior levels here that were resistance, right? Resistance, resistance, resistance. We finally broke out in November, ran up, proved it as support. So why would we not assume that this level is also going to be important? 297. That's my number. It could be 220, could be 300, 297, somewhere in that range. If we go back into the daily time frame, and why I'm speculating that level is important also is if we include this drawing. So here's this 297 level, this green mark, right? Sorry, guys. But you have a confluence of this trend line that has also not been back tested. So here's your risk range, 310 for the week, 339 on the top side. So to me, I'm going to be going long probably down in this region. I don't know how this is quite going to play out. But if we get down here, if we're outside of this risk range, maybe towards the end of the week, again, depends on kind of how earnings play out. But this 297 will be a big level to at least make an intraday trade, or maybe for a swing trade. That's maybe three to 5 days. I don't know. So to me, if I was a trader, I would be considering, sorry guys, I'm fumbling here. If I was short, I would be starting to take some profits here, depends on how much risk or how much more you have left, but I wouldn't be shorting down in these levels. I would be waiting patiently in hopes to find a better position. So again, we get back into that dynamic of inexperienced traders are maybe shorting this level, thinking we're going to crash down, where experienced traders are likely starting to take profits down here, and maybe we get a big capitulation bottom. I don't know how that's going to play out, but I would still anticipate a relatively decent move off of this level, this 297 level. And this could possibly still form a head and shoulders, but just maybe not the way that most people would expect it. So if we clear this drawing out one more time, this will make sense. So if 297 is our neckline, the possibility of us coming down here, just because we are so oversold, and maybe we bounce back up here and we go retest this 338, 340 level, right? This was told to be important levels. Why would it not continue to be an important level here, right? So if you were a long trader, maybe you buy at 297, and maybe if you assume this is our neckline, then maybe you cover here at 320. Maybe that's your trade. If there's a possibility, maybe you enter your long here, and maybe you take some off here, hold a little bit in case we bounce back up even to 338 before we continue down. There's a number of ways you can play this. But again, I wouldn't be shorting down here. I would be looking for a decent long opportunity. And that's the one I was the most excited about. So that's what I really wanted to talk to you guys about. Let's look at the IWM. Here's your risk ranges again, 200 down to 185. This yellow line was important to me. This is 190.60 approximately on the IWM, which we have not closed below since going back all the way to December of 2020, which we just closed below that today. So to me, that's a significant move. You can see how it held up in these levels. We tried to get below it, but it always recovered. But again, we closed below that for the first time. Similar trend line relative to like SPY and QQQ. But again, we talked about this, how it broke out, tried to retest, make a move up, came back down, kind of fluttered around it, and eventually it failed to hold this level. So that to me is a failure from the bull side. The bears are in control at the moment. So that kind of tells me I'm not quite sure where this one could bottom out. Maybe it is this 185 before it tries to get a mediocre bounce back up. Hard to say, but we're getting pretty oversold and you have some potential bullish divergences here. So this is the NDXE. This is the equal weight Nasdaq 100 index. Now I wanted to bring this up because it's similar to the QQQs, but it's the equal weight version of it, right? So it's a little bit more concerning because you have this, again, you have a more defined head and shoulders pattern playing out here, right? You've got a perfect neckline here at this level, which is what, 58.30-ish, somewhere around there. So if this does break down and becomes a head and shoulders, possibly how this could play out is maybe we come down to, we've got some clear resistance that happened in the past here, around this 55 level, right? So if one were to be, I don't know if you can trade this. Actually, you can. It's the QQQEW. So that's the Nasdaq 100 equal weight ETF if you wanted to play this one specifically. So if this were a head and shoulders, I would anticipate coming down to this 55 level, coming up to retest this 58.16-ish level, maybe 5800, give or take. And then I would expect it to continue down. Now, if this comes down to this level and bounces back up above that, this pattern is totally void. So it's really hard to say which direction this is going to happen because you have the equal weight telling us something different than the standard weight. So you have to keep in mind both of these indexes. Let's move on to the SPY top 10. I just kind of wanted to go over this one just because it's getting so annihilated. But this likely took a huge hit. So the top 10 holdings of the SPY were down 12 points in this index, 4.3%. A huge part of that is obviously Tesla because it got so hit today. And the one thing I wanted to bring up in this scenario is what they call a broadening wedge. So to me, the meaning behind this is expanding ranges. So you have the opposite of contraction. It's in expansion mode, right? This range is getting wider and wider. So volatility is increasing, the unknowns are increasing, and that's what happens in this type of pattern. Now, what happens in these patterns if they are to break down, for example, if this comes down here, retest this and drops back down to this level, that would be kind of what I would expect from a broadening wedge. But there is also the possibility that we finally come down. I should draw these lines a little better. Maybe come down here and maybe we get one more bounce back up that lines up with that Nasdaq 100 bounce or rally, bear market rally type of scenario before we break down. I know you guys probably don't watch this index, but point being, watch these top 10 stocks. They will be a crucial factor in where this market heads in general. Let's look at the volatility indexes quick. Let's get out of the drawing. We talked about the VIX Sunday night. We broke outside of broke back into this trend line range Friday. Monday, we gapped higher. Markets kind of recovered and closed green, right? But I talked about this 27 level holding. And look kind of what happened here, right? It held this trend line. It held the 27 zone. And as of today, we took back off to the upside. Now, I'm not quite sure how this is going to play out. There is a gap here around 35.13 that could get filled before we bounce. Again, we have to watch all these different levels. The VXN came up and retested the bottom side of this trend line that it broke down out of. Maybe it takes it back to, who knows? If we truly do drop down to that 297 level, I would think we maybe come back up and test, this trend line here. I'll show you on a bigger time frame. That'll make more sense. RVX tried to hold this bottom side of this trend line that it broke down, and now it's kind of recapturing it as of today. So you can see it pulled back on Monday, maybe thinking people were taking hedges off, but now that it broke back inside of it, that's what's putting more pressure on the RVX, or the Russell 2000, I mean. So there's a gap here around 40.17 that we'll have to keep an eye on. Larger time frame, VXN. I want to show you guys this. So we talked about the potential head and shoulders on the QQ cubes, or the equal weight Nasdaq. So why I want you to keep an eye on this, and again, this could play out a couple of ways. So if that NDXE head and shoulders were to happen, sorry, I should take this off, we possibly would come up and clear this 43.50 level. I would expect us to get up above this, maybe get our mini pullback here, which would give the index some relief to go retest that neckline before it takes back off. That's a possibility. If the other scenario plays out on the Nasdaq or the QQQs, maybe we come up, and I'm trying to give you different variations here. Maybe we come up into this expanding range here, right? So this is another broadening wedge that maybe comes back up in expansion mode before it maybe comes back down to this 40 level to retest before it heads back up. So there's a number of ways this could play out that we have to be aware of. Right now, the MACD is crossing over and turning back up. That is more bullish for the VXN, which is bearish for the Nasdaq. But again, we really have to be mindful of how this plays out into the end of the week. Conclusions. We need to continue to watch how these mega caps respond. So what happens with Microsoft tomorrow? What happens with Alphabet, Google? We have, looks like Facebook, Meta tomorrow, PayPal, Twitter before the open on Thursday. I'm less interested in that after all of the buyout stuff going on. But Thursday we have Apple and Amazon. Those will also be big ones to pay attention to. So how do these stocks respond? Do we get some short-term sell-offs? Do we get a capitulation bottom in the indexes? Where do the VIXs ended up? These are all things to keep an eye on, guys. So that's all I got for you. I do appreciate you guys watching this. I put a little bit of time into it, but again, I enjoy it. I like to do this stuff for you guys, and it holds myself accountable too. So good luck this week. Let me know if you guys got any questions or if you have anything you want me to look at. Have a good night.